What if you could invest in a $100 million Picasso without needing $100 million? For centuries, the ultra-wealthy have been quietly making fortunes from art, not just hanging it on their walls, but using it as one of the most powerful investment tools in the world. And now, thanks to new platforms, you don't need to be a billionaire to get in on it. In this video, I'm going to break down exactly how you can invest in art without ever buying a single painting, why the rich love it so much, and the platforms you can start with today. So why art? Why not just invest in stocks or real estate? Well, here's the thing. Art has something that other assets don't. It's both a store of value and a status symbol. A Picasso isn't just worth money, it signals wealth and power. But here's the part most people don't know. Art has historically performed really well. According to Citibank, contemporary art outperformed the S&P 500 over the last 25 years, with average annual returns of around 13%. That means if you'd invested in art back then, you'd have done better than the stock market. On top of that, art often moves differently from stocks and crypto. When markets crash, art can hold or even grow in value. That's why billionaires like to keep part of their fortune in blue-chip art. But here's the problem. You and I can't just walk into Christie's and buy a Picasso for $50 million. Traditional art investing requires insane amounts of money, plus storage, insurance, auction fees, and connections with galleries. For the average person, it's been completely out of reach until now. This is where fractional investing in art comes in. And the most popular platform right now is Masterworks. Here's how it works. 1. Masterworks finds and buys a high-value painting, say a Banksy or a Basquiat. 2. They register that painting with the SEC, just like a company going public. 3. Then they split ownership of the painting into thousands of shares. 4. And that's where you come in. You can buy shares for as little as a few $100s. When Masterworks later sells the painting, investors split the profits minus fees. For example, Masterworks bought a Banksy for $7.4 million and later sold it for over $12 million. Investors who own shares got to cash in on that profit. And they've done this with artists like Picasso, Basquiat, Monet, and more. That's like owning a piece of history, but from your phone. Now, Masterworks isn't the only player in this space. There are other platforms making art more accessible too. Yield Street. They don't just do art, they also have fractional investments in real estate, marine finance, and even legal settlements. Artex. This is actually a stock exchange for art, where paintings are listed and traded like company stocks. Public.com. This started as a stock investing app, but now lets you invest in alternative assets, including collectibles and art. And if you're more into digital assets, platforms like OpenSea let you invest in NFTs, though that's a whole different, much riskier world. Now, before you go all in, let's talk about the risks. Art isn't like trading stocks. It's not very liquid, meaning you can't just sell your shares whenever you want. You might have to wait years until the platform sells the painting. Fees can also eat into profits. Masterworks, for example, charges a 1.5% management fee and 20% of profits. And of course, art prices can go down. Just like housing or stocks, there's no guarantee. So who should invest in art? If you're looking for a short-term flip, this probably isn't for you. But if you want to diversify your portfolio, think long-term and add an asset class that billionaires have been using for centuries, then it might make sense. Think of it as a hedge, like gold, but prettier. At the end of the day, investing in art used to be a closed club for billionaires. But now, platforms like Masterworks, Yield Street, or Artex are opening the doors for regular investors. You don't need millions, you just need to start small and think long-term. If you found this video helpful, make sure to subscribe, because in my next one, I'll be showing you more alternative investments that most people don't even know exist. Until then, invest smart, diversify wisely, and I'll see you in the next one.